JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Danielson Charles. Today's the 25th of May 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, specifically our JFD research page. If you go on our website here, jfdbank.com, and click on the research tab right here on the top, yep, it'll take you to our page, which we update on a daily basis. So yep, I believe you can find a lot of useful information here. So guys, right, that's so yep. So now jumping into the chart, we can see in the chat room here, Evo, yep, good morning to you too. Looking at the charts, the first one I want to pick up here is the Shanghai Composite, and basically we had a nice, beautiful jump here. So, of course, yesterday, U.S. equities closed nicely in the positive territory. So today we had this continuation move higher from the Asian markets, and yep, you can see the Shanghai Composite exploded. It's still open. We still have around like 15 minutes something left of trading here. So yep, let's see if the index is able to remain above the upper side of the rising channel here. Now, if you remember previously when I covered the Shanghai Composite, basically what I said, that in order to consider a move lower, still certain breakout levels are required. So this, yes, of course, this could have been seen as a temporary, just like a temporary correction here, because the prevailing trend was to the downside here before entering this rising channel pattern. But as I said, yep, the breakout through the lower side of this rising channel would have been needed in order to go for lower levels. But that's the reason why I say this things all the time, because you can see the opposite happens, and this is where it reversed from that 21-day EMA and pushed higher. So to be honest, right now, I mean, we got a good move here, and the big question here is, can it go further north? Now, as you can see, the index is currently finding resistance near this 3,577-78 zone, approximately around here, marked by the high of the 3rd of March, or in other words, the highest point of March. This is where the index is currently getting a hold up. If it pushes further above this, then yes, of course, we'll aim for our next target, which is around the 3,600. Let me just quickly double check. Yep, 3,637 territory. Now, as you can see, it acted as a good area of resistance here on the 25th of January, which means that it's the highest point of January. And also it acted as a good resistance back here on the 23rd and 24th of February. So although we had a bit of an overshoot here, but still it kind of still the index remained below this hurdle. So this could be the next potential target, especially if well, first of all, we stay above the upper side of the rising channel, and second, if we climb nicely above this, the highest point of March. For the downside, now what I need to see here, now previously I talked about this 3,496 territory, but given that we violated it, and now what I'm going to keep an eye on here is this level here, the current low of this week near the 3,470 territory. At the same time, if we get a drop below this, this would send the price below the 21-day EMA, and yep, further declines could be possible. Hong Kong's Hang Seng Index also getting a nice push here. And looking at this, all this is looking quite positive here. We are breaking this downside line. This is what I talked about yesterday, and basically we are now climbing above this 28,793 territory right here. So if we manage to stay above it, then of course, yes, and this increases the chances for this index to travel further north towards the highest point of April near the 29,405 zone. As you can see, my arrow starts from here, but this is the so-called safer bet, because again, a nice good pop above this barrier of course would confirm a forthcoming higher high, and more buyers could join in. But here, for example, if you don't want to really miss out on all this territory right here, then of course, yes, keep your eyes today on this daily candle. If we stay above this barrier, above the 28,793, then yes, higher levels could be met. Now jumping into the Ftse 100, and yeah, we had a nice push here yesterday. We managed to stay above this hurdle. So now above this 7,040 zone, the one that I mentioned yesterday, and now, I mean, looking at all this, yes, of course, it increases the chances for a further move north. If we take a look at the cash index right now, we'll see that the price is currently trading at around 7,072 mark. So, yep, in a way, this idea is working out. So, as long as we stay above the 7,040 territory, then yes, my next target will be the 7,131 zone, which, as you can see, acted as a fantastic area of resistance. Previously, of course, here back in December of 2019, it did act as a strong support level, but now it took the role of a strong resistance. Although, yes, we had an overshoot here, but as you can see, the daily candles bodies managed to still remain below this hurdle. So that's what I'm going to be aiming here for, as like I said, as long as the price stays above the 7,040 zone. For the downside, pretty straightforward. Break of this short-term upside support line taken from below the 26th of February, and then a drop below the 6,904 zone right here is needed. The German index DAX, and last week, if you remember, I talked about this idea that if the price manages to stay above this 15,215 territory, and it manages to also stay above that 21-day EMA, of course, all this could kind of bring in more positivity and drag the index higher. So the all-time high currently stands at 15,538, but if we take a look at the cash index, we'll see that the index is now above this barrier, and basically we could be seeing a nice, beautiful opening gap here to the upside and above the all-time high, and yep. Now we're gonna aim higher. Of course, well, should I say, we'll continue aiming higher as long as the price remains above this already previous all-time high near the 15,538 zone. If it stays above it, then yes, of course, like I said, the sky's the limit for this one, and we could continue pushing further north. For the downside, what I need to see here is, of course, I need to see that drop below this hurdle, below this 15,215 territory, because at the same time the index would fall below the 21-day EMA and potentially this could increase DAX's chances of drifting lower because again, maybe this is where the weakness could come in again. But to be honest, I'm not going to drag this one way too much to the downside. Once again, I'm going to aim for this area right here between the 14,804 and the 14,845 levels, approximately around here, and then we'll take it from there, of course. Now jumping into DXY very quickly, the dollar index, and yeah, still trading below this downside line taken from the high of the 31st of March. But what's more importantly, it's once again coming closer to this hurdle right here, the 89.68 zone. I talked about this one, and that's the lowest point of February of this year. And in order to go for further declines, we need to see that drop below this area, and preferably, of course, the daily candle staying below this area, because this way, I mean, we're not gonna end up being with a false breakout again. So that's why for now, I'm gonna take a cautious, well, somewhat bearish approach. But in order to get comfortable with further declines, yes, a drop below this hurdle is needed. For the upside, well, I would prefer actually to wait maybe for a push above the 90.42 zone right here, and then yes, we could consider a further move north. Now jumping into gold very quickly here. So yeah, gold is correcting a little bit lower. So yesterday's daily candle formed a nice doji here, and which means that yes, this could be seen as a potential correction sign here. But of course, as you can see so far, the index is still trading above that 1875 zone. So in order to consider maybe a bit of a larger correction to the downside here, then yes, a drop below this hurdle, a stronger drop below this hurdle would be needed. And then we could aim for that downside line here again, for its test from above, or for this 1845 level. And then of course we'll keep an eye on this upside support line taken from the low of the 31st of March. Now, again, all this, of course, is if we get a stronger move below the 1875 territory, but so far we're not really getting that. So that's why there is still a hope for the bulls here to step in. However, if yesterday I'll reiterate a little bit my yesterday's analysis, and I'll say that now for the upside, I would prefer to wait for a push above the 1890 level right here in order to go for some higher levels. So long story short, basically, guys, for now I will keep an eye on this barrier here, this 1890. If that gets cleared, then yes, this will confirm a forthcoming higher high, and more buyers could join in. Now, jumping into Wti Oil. So look at this beautiful reversal here. I mean, this is for sure a nice roller coaster ride here. So basically, we've climbed back above this barrier, the 63.80 zone. I spoke about this yesterday, and also we climbed back above the 21-day EMA. In a way, all this, of course, is creating that slightly confusing situation, because although yes, it seems that the bulls are not really willing to give up here. However, let's see if they still are if they're able to overcome the 66.40 territory, the one that they're struggling with, because as you can see, we keep getting these false breakouts, but we're not really getting that daily candle remaining above this. So in order to go for some higher levels, we need that daily candle to stay above this area right here. And then yes, our next target will be the highest point of March, near the 67.94 level. Now jumping into a few cryptos, Litecoin. So recovered, tested the 200-day EMA and struggled to stay above it. So you can see that it climbed higher. It tested this 192.35 zone. exactly, it's 192.35 territory, and yep, it's kind of reversed back down. So the big question here is, of course, can we climb back above this 200-day EMA and push maybe towards the 100-day EMA here, or even the 21-day EMA, or even towards this upside line to test it from underneath. But again, it's a tricky one for now, guys. I mean, there is this, like I said, there is this hold up right now below this 200-day EMA, and to be honest, if it continues to hold, if it continues to provide resistance, then well, another slide here could be possible, and yep, more sellers could join in. If you're a little bit on the cautious side here, then probably a drop below the 118.50 territory here could maybe do the trick for you. But again, I do understand that we could be missing out here on a bit of territory. So, but to be honest, for now, I mean, it's what we can do. For example, here is let's say if we take a look at this inside swing high here near the 176.80 zone. If we get a drop below it, then potentially maybe we could see a bit of a decline here. However, we do have strong possible support areas somewhere around here, 157.37, or even maybe this one, the low of the 19th of May. So again, it's a tricky one at the moment, so that's why I'm keeping an eye on some of these barriers. And if we do climb and stay above the 200-day EMA, maybe, like I said, yes, I'll consider a bit of a larger correction here to the upside, and then of course we'll take it from there, because at the moment not everything's really looking smooth here. Of course, some of the crypto bulls do see opportunities here to jump in. Yes, could be the case. I mean, because again, let's not forget that with cryptos, sometimes there's not a lot of fundamental. It's more of a sometimes just a reaction trade. So yeah, at the moment, I mean, that's not really, like I said, technically from the technical side, doesn't look very positive. However, if you see potential in all this, then of course you know yourselves better. So you in general you should always do what you're comfortable doing with. So just yeah, but again, like I said, for now, that's the little situation here from that's the little picture, the little analysis from me here, because technically, from the technical side, I'm not really looking very. It doesn't look very positive. Let's put it this way. Ripple, similar story. Also, yes, we managed to rebound from the 200-day EMA, but we managed to get a hold up near this 100-day EMA, and so yeah, we did overshoot it a little bit here, but we kind of failed. We failed to push further, and actually this level here, that's what's interesting here, this level here, the 1.0606 zone, which marks the close of the 19th of May candle and the open of the 20th of May candle. So this level did provide good resistance today, this morning. Yesterday, of course, the candle remained below the 100-day EMA, but today, yes, that's the level that's kind of doing its job. So what I'm gonna in following this logic, if we do push above this 1.0606 level, then yes, maybe there could be a chance for a bit of a larger correction here to the upside, and to be honest, yes, the 1.20 level then becomes an interesting one to watch, but also keep your eyes on this 1.1823, which is basically the close of the 20th of May candle and the open of the 21st of May candle, and yeah, and then we'll of course take it from there. For the downside, now this is where I need to adjust a few levels. Let's recycle this one, and for the downside, probably I'll stick to this one again, following the same logic and seeing that sometimes it does like these opening and closing levels. So I'll keep an eye on the 0.7910 zone, which, like I said, marks the close of the 23rd of May and the open of the 24th of May candle. At the same time, if we do get a drop below this hurdle, then this basically we could also push the rate below the 200-day EMA, and potentially we could see a further correction here to the downside, because don't forget that we're still trading above this upside line taken from the low, the 29th of December of 2020. And then, yes, of course, we'll take it from there if we see that break lower. Now, jumping into a few pairs, AUD and AUD USD is here. So it's, yes, the whole risk on sentiment is playing well here for the for AUD USD, and yes, we are seeing a push higher. However, not only did I need to see a break of this downside line, but I would also prefer to maybe to wait for a push above the 0.7814 level right here, marked by the high of the 18th of May. My next target then will be this high, the highest point of May, near the 0.7891, or if it continues to rally, then next target is the 0.8007 territory, marked by the highest point of February. Basically, that's the kind of the simple game plan here for AUD USD. At the moment, I'm kind of taking a little bit of a neutral stand here, to be honest, because again, anything can happen. We're not really seeing a strong breakout here, so that's why I'm going to be a little bit more on the careful side with this one. For the downside, I need to see a drop below the 0.7675 territory right here. At the same time, we could see the rate falling below the 100-day EMA, and potentially more sellers could join in. So keep your eyes on that level right here, guys, for the downside. USD JPY, very quickly on this one, still not much is happening, but yesterday I mentioned this one, and basically I'm still sticking to the same rule that in order to go for the downside, a drop below this 108.57 territory is required. We're not seeing that yet, so that's why, although yes, we broke this upside line, we are below the 21-day EMA, but we didn't really get that confirmation drop here yet. For the upside, very conservative approach here from me, and yep, I'm keeping an eye on this 109.70 territory. That's what I need to see a break off in order to, after which we could aim for some higher levels. Gbp Cad. So Gbp Cad is interesting. So although we are trading here below this downside line taken from the high of the 24th of February, the pair it kind of reversed nicely from this area. Let me just grab one of these lines. Recycle as always, guys. It rebounded from this 1.6872 zone and kind of pushed higher. Now it's currently trading near the 21-day EMA, and the question here is, can it push further? Can it push above it, above this 1.7123 zone? Because that's the level that I'm still watching, because again, we keep getting overshoots here, but we don't really get that daily candle to stay above this. Now, if you want to go for the upside, then yes, this is the level that I'm keeping an eye on, because at the same time, if we do get a pop above that area, we would also be placed above the 21-day EMA, and yep, more buyers could join in here temporarily, and we could go for this downside line, and then of course we'll take it from there. For the downside, to be honest, I would start looking at the downside if we get a drop below the 1.7008 level, but to strengthen that scenario, the downside scenario, a drop below this 1.6955 territory could also do the trick for more sellers, so keep that in mind. Euro against the Turkish Lira, very quickly. So I do love to watch these exotic pairs, and well, this is what I mentioned to you yesterday. Basically, they do present themselves with nice opportunities, and well, they're sometimes very technical, as we can see here. So what we've got here is a nice ascending triangle, which according to all the TA rules tends to break to the upside. So but again, until the break happens, we cannot really kind of, let's say, get comfortable with that upside. So basically wait for that confirmation push above this the 10.3035 territory, approximately around here, which at the same time is the current all-time high here. And let me just show you the monthly candle here. Yep, you can see that we're near the all-time high again. So the question here is, can we see a nice pop above this barrier? And another thing for you to remember, of course, if you remember last time, basically, as I have mentioned this, that every single time when we make a pop above the kind of the all-time high, it creates a new all-time high. However, that daily candle then reverses and closes below well, at that point, the previous all-time high. So basically, for example, as you can see here, let's say this is where on the 22nd of March we had a new all-time high here. Then we broke above this area. We pushed higher, but then we still closed below it. However, this is probably the little exceptional move here, because, for example, here when we created then a new all-time high at this level on the 23rd of April, yes, the 26th of April candle pushed higher, but then still kind of drifted back down. The same story happened here on the 14th of May. We also created a new all-time high, then the daily candle drifted back down. So let's see if history repeats itself. Of course, I'm not saying that this exactly was going to happen, but again, whenever we hit new all-time highs, well, kind of that's the logic that I tend to follow. And finally, EURUSD, guys. So looking quite beautiful here. Yep, it's still trading above this upside line taken from the low the 5th of April. So everything is kind of still looking quite positive. But yeah, we need that confirmation break above the 1.2243 zone and we need that daily candle to remain above this area. If we get that, then yes, we'll get a little bit more comfortable with the upside. At the moment, I'm very careful. I'm very cautious here because, well, I mean, this has proven to be a bit of a roller coaster ride here in the past few days. So that's why I want to be a little bit more on the safe side. For the downside, I need to see a drop below the 1.2123 zone here. At the same time, the rate would be placed below the 21-day EMA, and then of course we'll take it from there. So guys, that's it for this session. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your views, your likes, your comments, guys. I really do. So thank you very much for that. If you want to catch me later on, my traders tea time, as always, 12:30 GMT time. For now, have a wonderful trading day. Stay safe. Have your stop loss in place, and everything will be fine. Thank you very much, and bye-bye.